Okay, brilliant, fantastic, very good. All right, so we'll start with general financial product advice. NP Financials Pty Ltd, NP Financials or NPF advises all service recipients of the following: the information provided only general and financial product advice basis. This is educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. So please go through this and then we will start the discussion. All right, so if you have gone through it, thank you for that. What I need to confirm with you is that whenever you are getting email from the breakout room, everything we post is actually goes through breakout room, and you get a mail for our client arena, and it says it will tell you, please have a look at your client arena in the update which has been posted in 12 hour. So you have to go to the 12 hour model and then see. Similarly, posted on 48 hour, you have to go to the 48 hour. If you go and if you get an email, update has been posted on asset class index, so you have to go to that index section. Similarly, asset class evaluation shares, you have to go to that share section, and so on and so forth. Similarly, if it says commodity, you have to go and see what has been posted on the commodity, and similarly forex, and also for bond. So these are for the asset class evaluations and the 12 hour and 48 hour and 4 hour. But also if you go to the monthly class, last 2 months, for unavoidable circumstances, we are doing this monthly class is scheduled from Sunday from 4 p.m. 16 hours. So last 2 months we only did 4 p.m. Actually we do at 3 p.m. So it is normal to get confused, but generally from next month onwards we will try to do it again consistently on 3 p.m. But due to unavoidable circumstances for last 2 months, last month and this month, we did it at 4 p.m. and please read that 4 p.m. is 16 hours Melbourne time. All right. So no, thank you for that understanding. And now what we will do today, along with taking all your questions, what we are doing is we are discussing one technical analysis tool or technique in whatever time frame we can do. For example, maybe 1 hour or 90 minutes, or depending on your questions, it will last for that. So today's discussion will be on anything you ask, but mostly it will be on to start with on the concepts of crack and snapback. So today we are going to discuss mainly crack and snapback, so that you understand what it is and how it can actually influence our understanding of crack and snapback technical analysis, and how to get benefited from that understanding, so that in future if price is cracking through one level and again snapping back, so in that case we'll do accordingly. Yeah. So let's see, this is in front of us is an Australian dollar chart, and this chart is 12 hour. As you can see there also it is written here 12. So 12 hours chart, every bar is closing 12 hour basis every day twice. So for example, if we have an if we have a sample example setup, which can be, for example, this one on 14th November 23. So if that is an hypothetical sample setup as in front of you, so if everything matches, we have taken the we have considered we have considered this to be an hypothetical example sample setup to go long. So example, we'll buy here and let's see what happens and how to understand what is a crack and snapback. So the next bar actually a bullish bar, and if you remember last 2 months discussion, in one of the discussion we discussed about 1 2 3 reversal bars, and another in discussion we talked about close above high taken out and close below low taken out. If you want me to repeat, I will again repeat. If you have any questions on that, I will again answer that questions. So just to remind you, what does it mean, close below low taken out, bar on bar, just on bar. So for example, if I delete this price line, for example, if I delete that, so let the Bollinger be there. So we have Bollinger and monthly pivot. So bar by bar, just to remind you what was discussed in last 1 or 2 months, is supposing we saw this, bar on the 1st November 11. This is a bullish bar. Not only a bullish bar, it actually closed above. A bearish bar high. So when a bullish bar is closing above, I hope you are seeing this uh, arrow. So if a bullish bar close is above the bearish bar top, then it can actually technically start a possible trend. So for example, on the first bar of this month, 1100, so this actually closed above. So if we, and fortunately the hypothetical sample setup also came here. So if that is the case, we probably will consider this as a possible go up bar, and then we'll go up from here. And then what we are seeing is after this, next one is a bullish bar, no problem. Bullish bar for a long is not a problem. This bar is a bullish bar, not a problem. Then the bearish bar came. So here is a question, and the question is this bearish bar close? I'm going slow again. I'm repeating third time in last 3 months for our benefit, so that we remember. The question is this bearish bar close? We'll ask that question to ourselves. Is below the low of the bullish bar? The answer is no. So no problem. So we'll hang on to this hypothetical trade, and then this question will ask, is this bearish bar? Because question will only be asked on bearish bar for a uptrend, and question will only be asked in a bullish bar in a downtrend. Okay, so let's see. We'll ask, is this bearish bar close below this bullish bar low, which is 71.92? Possibly yes, and the close here is 71.91. So it closed below 1.3 pips. So the answer is yes. Then we'll immediately not close, and then we'll wait for this low to be taken out, which is not the case in this example. So we were here surviving, we were here surviving, you were here survived, we here survived, not close, and then the low was not taken out. This is a bullish bar, no problem. Bullish bar, no problem. Bullish bar, no problem. Bullish bar. Here is the question we'll again ask. So next question we'll ask, is this close, bearish bar close below this low of the bullish bar? Answer is no. So next one is bullish bar, no problem. Then we'll ask, is this bar close below this? Probably not, because the low is 65 and the close here is 65.7. So answer is no. So in this what we are immediately seeing here, apart from that, there is a possible relative divergence, because the high of this 8 November 23 bar is 73.02, which is inside the Bollinger bar. That's why I kept the Bollinger 73.028, and this one high is 73. So this is higher by 2.8, but this is inside the Bollinger Band. So this is a relative divergence. So if we have considered this, so probably we'll get out at this point when the low of this relative divergence or turning point is confirmed. So we'll get out there. So this is clear. Is there any question on from 1st of November till 9th of November, in which we got two hypothetical example sample setup, and which could be considered closed here on 9th of November 1100. So this is the topic of bar close below low taken out and close above high taken out concept. So do you have any question? Anyone can ask any question on these concepts or write here on the chat section. Yeah, come near to the mic please. Yeah, yeah. Yeah. This one is a possible first bar reversal to go up. This is second bar reversal to go up, unless and until this close is below this and then low taken out. One option was satisfied, close was below, but the low was not taken out. Yeah, your question? Yes. So that was the question. Yeah. So why we see reversal? Because it price actually reverses. It is not, instead of going up, it is coming down. That's why we call reversal. But our definition, NP Financials definition, is solid in the understanding of it has to close below. Not only that, but the low of the closed below bar has to be taken out. Is there any other question? Please ask questions so that our understanding gets improved. Or write your question. All good? Lisa Binod Selvan. Okay. All good? Fantastic. You have to unmute and mute yourself after talking. Fantastic. Alright, so far so good. Then if this bar is a 2 TP setup, then possibly we'll consider to go short, because this close now let us delete those arrows, because we have discussed those. Now the first thing first, we are going bar by bar. Now the first thing first is this close, this bearish bar close is below this bullish bar, and the low of this bearish bar is taken out. So eventually we have to close every order, every long order here. Then we can initiate a short order unless and until we see an S2 sample setup. I did not see here anything. So but for argument, it actually continued this. If we have to draw a Fibonacci, so then we'll draw this Fibonacci from here to here. So till 50%, till 50%, if we have drawn this Fibonacci till 50%, so we'll take that 38.1, which is not required. We'll take that 61.8, 78.6 and 88.6, because it reversed in this example from 50, the thick line. Alright. So if we have drawn the Fibonacci from the swing low on 30th of October 23 to the relative divergence swing high on 8th of November 23, price actually cracked through the 50% Fibonacci and immediately snapped back. So this is one example of this month's discussion of crack and snapback. So it can crack and snap back. If you have not written down, please write it down. Can happen on monthly pivots, weekly pivots, or Bollinger bands, or Fibonacci, or any demand supply line coming from yearly, quarterly, or monthly. So crack and snap back, which can be actually very effective tool in our arsenal to know, to understand where price is doing what and when and why. So if I have to discuss this, why price reversed from here, because there was a Fibonacci support here 50% at 71.85. It cracked through that as if it is going down, and it low was taken out by 6 pips, not by our standard of 10 pips. So low was taken out by 6 pips, not by our standard of 10 pips. So 10 pips was not satisfied, so we will not go short here, and then immediately snap back. So this crack and snap back. So what is the crack here? So this is the crack here. So the red bearish bar cracked through that, cracked there, and immediately snapped back. Immediately snapped back. So this is cracked and snapback. So this entire situation is cracked and snapback on the 50%. So if we have understood that, then we'll continue our discussion which we are doing for last 2-3 months. So first come first, this is the bullish bar. We have to ask, is this bullish bar close above the bearish bar? And the answer is no. Then the next bullish bar, is this bullish bar close above this bearish bar high? The answer is yes. So we'll delete this. And then from here, fortunately, one hypothetical sample setup here was actually generated, so on this exact bar, which was very nice. Same thing was happened here, same thing, beautiful thing happened here. So these are actually same thing happened here, which is brilliant, excellent. So on the very early stage, we are getting a sample setup here, close above, and this fellow close above. Fantastic, which is brilliant. Which we actually very early in this stage, we are getting this sample setups. So we ask a question. Even if there is a sample setup, we need to ask our questions. So we have written down our checkpoints before taking a possible trade. We have written down a checkpoint. Is there any crack and snapback? Is the direction in the impulsive wave? So if this is the impulsive wave, then we'll ask, is this in the same direction of the impulsive wave? So this can be the checklist points which we could have written, and everyone's checklist point can be different depending on their back testing, depending on their understanding of the technicality of the charts. Alright, so if this is a hypothetical sample setup, then the next was here, the next one will go bar by bar. So the next bearish bar came here. So we'll not frighten ourselves. What we'll ask is this bearish bar close lower than this low of the bullish bar? Answer is no. So problem, no problem. So we're hanging on. Then what we see, that possibly this is a crack, and then on the M1, on the MR1, on the MR1 here, as you can see, MR1, MR2, MR3, monthly pivot 1, monthly resistance 1, monthly resistance 2, monthly resistance 3. Similarly, monthly support 1, monthly support 2, and monthly support 3. Alright, so this is a crack, so we'll immediately say that this is a crack. So there is a possibility of snapback. So let's see. Otherwise, price will close below this, and in which we will close the trade. So let's see. We saw a bullish bar along with a hypothetical sample setup. So here mentally, either we write mentally, or if we are practicing, then we'll write snapback to practice this. So what happened here, there was a crack here, and it got a snapback on the Fibonacci, if you remember, and there was a crack here on the monthly R1, and there was a snapback. So bullish bar we are going long, so no problem. Bullish bar we are going long, no problem. Bullish bar we are taking a long, no problem. Bearish bar. So if this is a bearish bar, remember we are doing a very tight time frame, which is 12 hours. I know 12 hours, many of you are favorites our time frame, because it closes twice, and that time we are actually at home at 11 o'clock when it closes our time, Melbourne time, and Perth would be probably 9 o'clock, right, Sri? All right, so we have, thank you for that, we have a bearish bar, and we need to ask, is this bearish bar close below this low of this bullish bar? Answer is no, so no problem, hang on. Then there was a fantastic bullish bar, and most of us, from our technical analysis, we'll probably tell that this is possibly a all buyers out type of bar. So if that one here is a all buyers in bar here, all buyers in bar here, for example, we'll write all buyers in bar, and then possibly we can say that all sellers, all buyers out. Although technically, very strict technically, we cannot say that because the close is above the resistance. If you see, the resistance 2, monthly resistance 2 is 73.31, and the close of this bar is above 73.31.6. So it closed above the resistance by 0.0003 pips, but it actually technically closed above. So if the close above is very tight, like 0.00003 fifth decimal place, so if we have trained our eyes, and it is also R2, which is resistance 2, not many months price will go above the resistance 2 from our understanding of the backtesting which we have done in pivot module and units. How many months we requested you to do, it goes up to R1 S1, how many months it goes up to R2 S2, and your response was probably 15% it time it goes up to R2 S2. So if you have trained your eyes to see this as an all buyers out, technically 99.9%, but not 100%, because it closed above, it should close below for ABO, but we can consider that 0.00003 as an all buyers out. If we are very strict technically, we will say no, this is not technically all buyers out, then we will not possibly take profit or close the trade. Then what will happen, let's see. So this bar actually, we again ask a question, is this bar closed below? No, but that will be probably too late of 50 pips. So but in that case, what we have seen, the repetition of the crack and snapback for the third time. So this bar actually cracked through the R2. Crack means it closed above, and then immediately this bar actually snapback. So this crack and snapback happened 3 times in this month. So one in a Fibonacci on 12th of November, second on monthly R1 on 14th of November, and lastly it happened on R2 resistance 2 on 16th of November. So this is a crack and snapback. So our topic for this month was crack and snapback, and in this example in front of us, from 1st of November till date, which was on 19th of discussion our point, we have progressed up to this point. So 19th of November, so we saw 3 example of crack and snapback. So do you have any question? Please think about and ask. Clear all your questions on crack and snapback, all sellers out, all buyers in, all buyers out, so on and so forth. Close above low, high low taken out. Come close to the mic, please. Yeah. Preferably consecutive bars. But that's a good question. Preferably, Sri is asking, crack and snapback has to happen consecutive bars or not. The answer is preferably yes, provided you have drawn the Fibonacci. So if you have drawn the Fibonacci as we have demonstrated from this swing low to this swing high, if someone has drawn that Fibonacci, then the crack and snapback on that instant actually happened on consecutively, as you can see on the 50%. But if someone has not drawn that Fibonacci, because Fibonacci has to be manually drawn, it is not in this software, it is not automatic, but in some of our actually educational courses like intraday, we have done automatic Fibonacci, in which Fibonaccis are drawn automatically. So if you do the intraday course with us, the Fibonaccis will be drawn automatically. So if someone has drawn the Fibonacci, then it will be a crack and snapback on the consecutive. But if someone has forgotten or not drawn Fibonacci, then the crack and snap would be on the next second bar on the R1. Did you observe that, Sri? Hmm. But here on this one here, 14 November 11 and 14 November 23 on the consecutive bars. On this one, 16 November 23 and 19th November 11, Friday and Monday, consecutive bars. Any other question? Selvan, Lisha, Binod, you can type in if you have some problem with your microphone. All good? Okay. So in this example, we saw three crack and snapback, and see next one. Uh, when we are going through, if we have not closed the trade here on the all buyers out, we have to close the trade on this snapback. If we have not closed the trade on the snapback, we need to observe this gap here. So there is a gap here. So this can be a breakout gap to break this possible up move which was continuing for a time being, or a corrective move. So this bar did not close below, that's fine. This bar did not close below, that's fine. This bar did not close below the low of the bullish bar, that's fine. But actually this fellow closed below on this bullish bar low, and then we immediately need to ask, is the low taken out? The next bar did not. And till date, what is happening, uh, uh, this bar actually high was not taken out, and then this bar low was not taken out by the bearish bar. This bullish bar low was not taken out by the second bearish bar, and this third bearish bar actually took the low of the bullish bar. But again, this bar low was not taken out by the 10 pips. So nothing has happened to go down, and this bar close is above this, but the high was not taken out, and this bar close was below this, but the low was not taken out, and we are having a support here. And then we saw the continuation of the up move until date we are here. So that was one example of multiple thing which we discussed on the last two Sage monthly class, just to revamp your understanding of how the understanding of bearish bar close below bullish bar low, and low taken out, and bullish bar close above the bearish bar high and high taken out, and how to improvise our understanding of all buyers out and all buyers in, and how to draw Fibonacci to understand if possible crack and snapback happening on that. And there was no crack and snapback here because it never closed below the resistance. So your questions on Aussie dollar for last 1 month, especially from the point of view of this month's discussion point of crack and snapback. So your understanding, everyone has understood. Bar by bar we have gone through and saw, and possibly take advantage of our understanding of crack and snapback. Please ask questions so that it improves our understanding of bar by bar, because market presents bar by bar itself. So we have to, yeah, yeah. So Binod's question is low taken out or high taken out of the bar which has closed above or below. For example, this bullish bar close has to is above the high of the bearish bar high, so this high has to be taken out. The bar which is closing above, that same bar high has to be taken out. Like this one here close below, and this bar low has to be taken out. Is it clear, Binod and Sri? Vinod, you can type in. If you can't talk because of your microphone issue, you can type in here messages. You know, you are an IT guy, so you know where to type, isn't it? In the chat section. Why? Where is the message? Is it? Oh, sorry. I think the message is hidden. Sorry. Low taken out has to be taken on the closing basis. Yes. Crack and snapback has to happen. My microphone is not working. Can someone let know part that I have posted a query? Yeah. So sorry, Binod. I saw that. And is it clear now? Vinod, is it clear? Please write yes or no. So that high taken out can be intraday on closing basis. No, high no intraday. Yeah. It need not close. It need not close. See, when that's a good question actually. Binod is asking. It has the is the if I have understood clearly, high taken out is not the close. No. High taken out has to be just like this one bar. There are two things. First bar has to close above, which is very clear. So this is a bullish bar which is 13th November 23, closed on next day morning 11 o'clock Melbourne time. Now this bar is clearly closed above the high of this bearish bar, no questions on that. Now the next bar which has to take the high need not close above, like this fellow here Vinod. The high was 72.37, rounded 37. So any bar next or next bar has to print a price which is 72.47, because 37 plus 10 is 47. Let's see, the next bar did not print a value of 47 because it could go up to 38. So it was not satisfied. Next bar, this bar has printed a high price of 53. Our requirement is 47. So it printed a high of 53, but it closed below 47. So that is not the problem. It has to take the high of the bar on the high basis, not on the close basis. It need not close above 47. It need not close above 47, as in front of us 14th November 2300 bar did not close above 47, which is our requirement, because 72.37 plus 10 is 72.47, but the high actually was higher than 72.47. In this example in front of us, it is 72.54. Did I answer your question, Binod? Yeah. Binod says thanks, Partha. Got it. Very good. Excellent. Yeah, these are simple technical things which must be very clearly and crystal clearly understood and implement in future if possible. So I actually need to have these questions from you so that your understanding is actually close to technical requirement. Thank you, Sri, for letting Binod's question, which was hidden in the chat section. And thank you, Vinod, for asking that question and getting it clear. Any other question? Please type in. Yeah, yeah. So Sri has, thank you for that, Sri. Thank you for the question. She has asked a question: how to, what is the relationship between the range bar, line chart range bar, and normal price chart, bar chart, or candlesticks, and how they are formed, and how to understand that? Is that the question, Sri? Okay. So let's go to the line chart now, which is the range bar. From 1st of November on this date, which will go to the 1st of November, and then will continue till the 30, 30th of November on the line chart. So line chart range bars are designed in such a way that every bar, the relationship or the difference or the distinct difference between a bar chart, whether it is daily or 12 hourly or 4 hourly or 48 hours, does not matter. They actually are bounded. The bar charts or the candlestick, doesn't matter. The bar chart is actually bounded by a time frame. So they are actually bounded by a time frame, bounded by time frame. So they will close no matter what. So they will close. If it is a 4 hourly chart, they will close on 4 hour, every 4 hour, or if it is a 12 hourly close, they will close every 12 hour, or if it is a 48 hour bar, they will close a 48 bar, and so on and so forth, 48 hour, or if it is a 24-hour bar, they will close, or a monthly, weekly, doesn't matter, anything and everything. They have a boundary, they have a defined start time and an end time. So the bar chart candlesticks or bar chart, whatever, doesn't matter, because if you are familiar with candlesticks, so the candlestick will probably look like this, or if you are familiar with Hikinashi, the Hikinashi will look like this. No matter what, so every we prefer here bar chart. So you go to the bar chart. It can be candlestick, doesn't matter. Because you can see candlesticks on bar, like this is a harami, and this is a piercing, and this is a bullish piercing, and so a bearish harami, so on and so forth. All right. So to understand range bar, first we need to understand the bar chart or a candlestick chart. The bar chart or a candlestick chart are designed and they are bounded by the time frame. So it can be 1 minute, 4 hour, 12 hour, 48 hour, 12 48 anything. So any time frame which you can see, all these 1 second to 1 minute, 2 minute, 3 minute, 5 minute, 10 minutes, 15, 30, 1 hour, 2 hour, 3 hours, 4 hour, daily, weekly, monthly, quarterly, yearly. They are all bounded by the time frame. So that is bar chart. Now, what is a range bar in a line chart? They are unbounded. So that is the basic difference. So unbounded means what? Even if it is 4 hour, we have to give some hourly, and our backtesting has shown us that 4 hour is not a bad time frame for this line chart. Of course, we can change it to daily and they will look like this. Of course, then we can change it to monthly, they will look like this, and so on and so forth. Weekly, we can change it like this. So they every time frame, but we have seen our backtesting and our simulation that 4 hourly is not a bad one, so we have selected 4 hourly. So 4 hourly has a role to play, but not the important role. The important role here is range bar is actually not bounded by time, but bounded by the pips value. So here bounded by the pip value, whatever has been printed. So whatever has been designed. So if it is 50 pips, it will go up, every range bar will be 50. If it is 100, every range bar will be 100, and so on, so 10, 5, 1, whatever it is. So we have selected 50. This is not a bad one. So the range bar, to understand, they are not bounded by time frame as the bar chart or candlestick chart, but they are bounded by the pip value. So every bar, if I keep here on 27th October 02, the high minus low will be 50. 7110 7110 minus 7060 is 50 pips. Next bar, high 7137 30.7 and 7080.7 is difference is 50. Next bar, 7181 minus 7131. So the range, that's why they are called range bar. The range which is defined. What is the definition of range? If you remember our technical discussion, we define the range as high minus low. So the high is 7181, the low is 7131, the range is 50 pips or 0.005 in front of you. So is this clear to start with, Sri? Okay. So this is the first understanding of the range bar. So the range bar are bounded by the pip value. But at the same time, we have to define, if we have defined every range bar has to be 50, even if this one high is 7237 and low is 7187, so 50. So if we have understood that, then the next thing we have to understand is when this 50 gets complete, then when it will close. Even if the 50 gets completed, that will close on the defined time frame here. So in the time frame here, we have asked it to close 4 hour. So it will be, every close will be a multiple of 4-hour time frame. So let's see, this one closed on 02, which is 4-hour multiple. This one is 23, which is 11 o'clock, because it opens 11, then goes up to 11, and then 3, and then 7, and then 11. Okay, so 11. This one is again 11 o'clock morning. This is again 23. This is again 11. So what does it mean? Even if it gathers 50 pips in 80 minutes, it will wait for 240 minutes. Or if it is gathering these 50 pips, the market is moving 50 pips up from the low point, then if it is gathering 230 minutes, in 230 minutes it has moved 50 pips for Aussie dollar, but it will not print the bar then and there. It will wait for 240 minutes, because 240 is a multiple of 4. So it will wait for two things. First thing, it will wait to see if I am a range bar. If I am a range bar, then I will wait to see if my high minus low is 50. Number one question, I am a range bar, I am asking my question. Then the tick mark is yes. Then second question, I am a range bar and I am asking this question to myself, is the time of close is a multiple of 4 hour. Then if it is a tick mark like 11, 3, 7, 11, 3 means 15, 7 means 19, 11 means 23. So 11, 15, 19, 23 is, I don't know whether the English is multiple. I think it should be every 4 hour or addition. So whatever the English is, as long as you understand. So if I am a range bar, I'll wait for the 4 hourly close, nearest 4 hourly close after my high and low is 50 pips. Then I will print myself. I'm a range bar, so I'll print myself one range bar 50 pips, and I'm closing either on 11 hour or 15 hours or 19 hours or 23 hours or 300 3 colon 00 hours and 7 colon 00 hours. So every 24 hours is having 6 4-hourly slots. So if both the checkpoint for a range bar is satisfied, then the range bar will be printed. So these are the aspects of range bar. Does it answer your question, Sri? Do you have any question? Come to the come close to the mic, please. Yeah, yeah, yes, yeah, yeah. So Sri is asking, as soon as it is satisfying these two conditions, pip value of 50 in this example and time value of 4, additionally, so arithmetically, yeah, the English is arithmetically. If it is arithmetically 4, then it will close. But for example, let's see, for example, what happens in 4 hour, within a 4 hour, price due to some news or whatever it is, due to high volatility or whatever it doesn't matter, in 4 hour it has moved 55 pips. So what it will do, it will immediately print, it will not wait for the 4 hourly, it will immediately print the 50 pips here and then start this bar. But the danger of the next bar, because this bar cannot go up to 55, so this has to close high minus low 50, this has to close. But if that close happen in 4 hour means 240 minutes, but if this 50 piece market has moved in 200, 4 hour means 16 to multiply, yeah, 16 to 4, 240 minutes. But if the market due to high volatility has moved 55 or 60 pips in 1 hour, then what it will do, it will print the bar immediately and it will not wait for that, and then it will print the next bar. But the challenge there is, if if the next bar if the next bar comes below the high of this bar, previous bar, within a 4 hour slot, then this bar will be deleted as if it was never printed, and the entire bar price will come here and the existence of this bar will not be there, because it is not satisfied the time frame of the 50, although it moved 60, but it will come down. So that what happens, and that was actually the challenge of understanding the range bar, why it closed, why this bar vanishes, and so on and so forth. Did you understand, Sri? Mm. Come again? No, the gap, as I told you, the gap will, Sri is asking why this gap happens. As I told you, the gap will happen because this bar cannot go beyond 50. So if within that tick, if within that tick between this covering 50 and the next tick means bid and ask has to match. If that tick is happening at 60 or 52 or 51 or 57, there will be a gap of 10 or 1 or 2 or 7. That's why the gap is. So the gap depends on the tick value beyond this 50 pip, beyond this 50 pips. So that's why ticks, that's why the gaps actually easily easily tells us where is the volatility. If this is the if the price is coming down here, and if we see a gap here, then this can be a breakout gaps, because there is a difference in tick value here. That means buyers are jumping in and they are crazily buying. Did I answer your question? Yeah. Yeah, so to completely understand this bar, when it is getting printed, when it is getting evaporated, and when it is there is a gap, you have to see this bar whenever you are getting time moving. For that, one good thing what you can do, if you are having no, how long should I wait? You can make it actually 1 minute, for example, 1 minute or 1 second doesn't matter. So 1 minute, and then what you have to do, I have made this 1 minute. Supposing we have 10 minutes in front of us, so we'll make this 1 minute, and then we'll make this change. Will this change to, see, I have changed this to 1 pip. So every bar now, high is 7307 and 7 low is 7306. So I've changed the unit size to 1.0001. So every bar size now is 1. So if I have 10 minutes, I can see how they are getting printed, why there is a gap here, why there was a gap here, why that bar evaporated, and so on and so forth. So this is a very good question, and this is a very good way to understand the formation and the relationship between these range bars and the bar chart. If you change the time frame to 1 minute, change it. If you are not if you are not happy with 1 pip, 1 pip is too much, make it 3 pips, make it 5 pips, whatever mathematically suits you. Let's make 5 pips. So in 1 minute 60 seconds, price moving 5 pips is not bad for Aussie dollar. So what we saw here uh, um, uh, on this one here at 422, price moved 5 pips because the high was 73.10 and the low is 73.5, and this was 422 in the morning, and then the next 5 pips moved 428 on 4 minutes, and the next 5 pips took 28 to 43, so that is 15 minutes. The next 5 pips happen 15 minutes, and so on and so on and so forth. During volatile period, for example, if you change it to GBP USD, for example, if you make it to GBP USD, which is Great Britain pound against United States dollar, and observe during the London session. So if your bars are not printed, you have to increase this length, maybe 888, whatever it is, so that you have more bars. Yeah. So this is a 1 minute chart of GBP USD, which is sterling, and during London time, which is from here, our 16 or 17, our 16. So from here, if you see for 3 hours or 4 hours London time, so from that point to this point, which is 20, so we started our observation 16, we can observe up to 20, or if we come late from office, we can start our observation from 19. So from 19 to 20, 1 hour, 1 hour observation. And in 1 hour observation, what we saw, that this bar gets 5 pips from 1913 to 1917 in 4 minutes. This bar got 4 pips, sorry, 5 pips in 7 minutes. This bar got 5 pips in 4 minutes. This bar got 5 pips in 10 minutes. This bar got 5 pips in more than 5 pips. That's why there was a gap. Whenever it is getting more pips due to volatility, because the London session is open, American as a European session is open. So whenever there is an increase in volatility, then in 1 minute price will move more than 5 pips. So whenever price moves in 1 minute, whenever price moves in 1 minute more than 5 pips, in this example, because the bar size is 5, then there will be a gap. So if you write down 1938, 1943, 1944, So there are two gaps in a 5 pips range bar. 29th of November. So 29th of November, just write down. On 29, I'll take a snapshot to remember this. So that was on 29th of November, yeah. Yeah, I got it. 1943, 7:43 time. So let's change these to, for example, change it to 10. So what we are increasing this is 10. 0.0010, and let's see, is there a gap when we change from 5 to 10 or not on during that time 1943. So let's see that actually there was the gap is still there but reduced, the gap is reduced. So now let's increase it to, let's say, 15, because during high volatility 1 minute can move more than that. So one gap is gone. So what we can see here, the 743 gap is gone, the filled in, because in 1 minute from here 1904 to 1930, not a single minute printed more than the range bar value, which is 15. But from 1930 to 1944 there were printing more than 15 pips. That's why the gap was there. So is it a very good way to understand why bar charts is printing what it is printing, and how to understand that. Make sense? Not about. So this bar chart has also confused me a lot when I was like you, and that I used to study the way I showed you, and if you study that the same way, then you will understand the characteristics of bar charts. So any other question on the bar chart? Yeah. Hmm. Hmm. Can you come close to the mic? So Sri is asking a question on the trend line on line chart. Is it Aussie or Sterling? Sterling? Okay, hold on. I'll change it to Sterling. Should I stick to Aussie or go to Sterling? Yeah, Aussie is fine. So Aussie in front of you, yeah. So he's asking a question on Aussie USD on a 4 hourly range bar, and the question is related to trend line. Go, please, Sri. Complete the question or write the question. Yeah, first drop is this. First drop is this one. Last bar is not completed. Consider, okay. Hmm. Huh? Sorry. This one here. He is asking to join to draw a trend line. He has to wait. He has to draw the immediate ones, or he has to go all the way. Okay, the trend line. That's a good question. The trend line has to be drawn better if the trend line is drawn up after a trend reversal. So for example, if this is a trend and it is printing here a double bottom and possibly a relative divergence, if it is that, and or a possible relative divergence here, if we see here, then we'll probably wait for this trend line to draw to consider this. So what we will do is we will start from the bottom and then go to the next trend, which is here. So that will be the first trend line. Once broken, but it did not break the, it has broken one, it not enough broke the two. So once broken, so the next point is to wait, is it coming below the previous peak or is it coming below the gap. So this gap and the peak is a support, so it did not come and did a turning point here. So our job is to change this, modify this trend line, because trend line is dynamic, is to modify this trend line up to this point. Then we saw a reversal. Then we need to see, has it broken the previous one and this one. If not, then we saw this last one. So if not, then we will dynamically change this trend line to this one. So the trend line, either you draw this way and then you join this to this, so you get the flavor of both the trend line from the beginning as well as from an intermediate point of view. Both these trend lines are valid. Does it answer your question? Yeah, so his question is, he has to confirm trend line tentative. Both of them, the way it is drawn, are actually the tentative trend line. Why? Because this high is not taken out. But if I have drawn a trend line from this point to that point and consider this as a crack and the next one as a snapback on the trend line, if you see in front of you. So this is the discussion of our monthly class today, crack and snapback. So I delete this trend line. So if I have drawn this trend line, then this fellow cracked and immediately snapped back. So in that case, that is a valid trend line, which is a question of Sri, because this high is taken out. The intermediate, because this is a swing low and that is a swing low and this is a swing high, and the high of the in between swing high is taken out here. So that is a confirmed trend line. Does it answer your question, Sri? Yeah, absolutely. So Sri is asking, can we see a crack and snapback on the trend line? Yes, crack and snapback on trend line, crack and snapback on moving averages are all valid. Anyone else asking any other question on this line chart or range bar? Can unmute and ask or write. Alright, so if there is no question there, what we'll do, we'll see another opportunity of to demonstrate. crack and snap back, which is the topic of this month's class. So let's see. Yeah, this is a crack and snap back here, which was Euro CAD. The first example sample setup could be considered closed on crack and snapback on 2/11/23. So let's see 2/11/23 on the first sample setup, which is here on Euro CAD. All right. So this is a hypothetical sample setup here on 2 November 11, and we are thinking to go long, but immediately what happened? It cracked through this pivot and snapped back. So either we can do two things here. Let's make it zoom out. So let's implement the our understand check our understanding here. So if this is a hypothetical sample setup, no problem. So we'll consider this because nothing has closed below this last month's. I think it is S1. So this fellow did not close. This fellow, so on and so forth, not close below, and this fellow close above pivot, below pivot. This is below pivot. This is above pivot, and this is crack and snapback. So this cracked through, and this is actually snapback. So we got an opportunity there. So if we consider that opportunity, let's see what happens next. So immediately we saw another crack here and a snapback here. So this fellow cracked the pivot points and immediately snap back. So what we will do, we'll ask two questions here. Is the close of the bearish bar below the low of the bullish bar? Answer is no. But is there a crack and snap back of this close and the next close? The answer is yes. Then we'll wait for this low to be taken out in future, so that we'll close this trade. So let's see that. So low was taken out. So let's see how many pips. So by more than 10 pips, because 12.6. So that has to be closed on a crack and snap back. And immediately there was the situation reverses. So this fellow cracked and this fellow reverses back. So if it is a line chart LTP, line chart turning point, or a 2TP, so we'll possibly consider this. And then we'll have to ask this question again. From this point, if we are going long, is this close below this? No. Is this close below this? Yes. Is the low of this bar is taken out in the next? We'll see. So a interesting point here is, because of the presence of pivot, and which is a very neutral point, because so many crack and snapback happen, close above, close below, close above, close below, close below, close above, so many things happen on the first few days. So we may expect, alright, although it has actually closed below, we need to see a close below the pivot and then possibly close the trade. If you are that type of conservative trader, then we'll wait for the close below the pivot, did not close below, and probably this fellow is a close below. So the problem with this understanding of waiting for a close below is this. So it may close below too much beyond the pivot, or you may say that okay, I am happy to sacrifice pivot is 49.28. I'll be out at 49.18, which is 10 pips below the pivot. So instead of getting out there, I'll get out there. So that is also not a bad way to consider price objective. So let's see what happened again here. There's a multiple crack and snapback on the pivots. So it closed. This is a question which Sri asked: has it to be uh, consecutive or not? So if we are considering this pivot, so this is a crack on the downside of pivot, and this is a snapback to the upside of the pivot. So if we have drawn a support line from the hammer, which is this one, because if we change the candles bar chart to a candle, so this is a kind of hammer, and before that there was a engulfing. Why I say a kind of hammer? Because it is having a upper wick. A hammer, technically speaking, should not have a wick and the upside. Yeah. So from this point, this is a harami, and this is a kind of, this is engulfing, and this is kind of hammer. So the low of the hammer is always a support, is always a support. So that got a support here, and from that support, this is not a very good example of a morning star, if you remember, but a kind of, because why it is not a very good example of a morning star? Because the close is not above the midpoint of this one. So the first bar was alright, second bar was a dozy, not a good one, but you can consider this as a, alright, but the close of this bar has to be above this for a morning star. If not, then what we can do is we'll combine these two, bar, 13 November 11 and 13 November 23, and see whether the close is above the midpoint of this. Yes, so in that case we'll say that this is a possible morning star from the support of the hammer, which is most important. Support of the hammer is number 1, and it is coming after a down move. Alright, so in that case, supposing we consider that or this as a sample setup, then this fellow close above, we expect a crack and snapback either on this R1 or on a Bollinger band. So let's or on a Bollinger band, so which is going through this. So this fellow close above, this fellow close above, and this fellow close below. So if we see, go ahead. Yeah, these two, yeah. 13 November 11 and 13 November 23. Because in a daily, 13 November 11 and 13 November 23 will be in a daily, it will be a one bar, isn't it? So let's make it daily 13 November to see. So 13 November this one. So this is a engulfing, and this is a morning star, and this is a morning star. So we can actually draw a support line from this and see the close is not going below these points. Can you see that? And this is an engulfing here, which gave a support to this. So the engulfing close, price is not perfect, so it will not always behave as a perfect characteristics. So what it will do, either it will not print a close below the previous print, or it will not print a low which is lower than the previous. So in this case, it did not print a close below this previous close. Same thing is got repeated. This close was not below this close. So 12th November close was not below this close of 24th October or 25th of October. Can you see that? So if that is the case, and this is engulfing, as you know from our module uh, and units on this instruction based discussion in 3 months trader foundation. If you go to the 3 months trader foundation, and you want to revise the technical analysis or understanding of candlesticks, which is easy to forget unless and until we are practicing. Anything which we do not practice is easy to forget. So if we click on instruction based discussions and click on 3 months trader foundation, and if we click on, after going through the general financial product advice, agreeing to it, module 3 and unit 1, as far as my memory goes, it is a candlestick. Yeah, identification of correct market reversals through candlesticks. So after the history of candlesticks, representation of candlesticks. So in the page number 6 of module 3 unit 1 in 3 months data foundation, we have morning star definition here. So if we want to match that, so it has to, second candle has to be a dozy. That means the upper wicks and the lower wicks has to be more than the body, and the third green or the blue candle close has to be more than the first one, half middle point. For engulfing, the entire body of the red candle has to be engulfed by the entire body of the bullish candle. So that's what happened here. So the entire body of the red candle is engulfed by the entire body of the blue candle, and this is morning star. This is morning star, and this is engulfing. Yeah, so that was not the discussion point here. So what we are discussing here is a possible crack and snapback. So if we have gone on a engulfing here, for example, those of you have done the, many of you actually done the candlestick course. So this is engulfing long, bullish engulfing, and then what happened on that is there is a crack and snapback here. So this fellow cracked through the Bollinger. This is fellow cracked through the Bollinger and also R1. So that was a crack, and immediately this fellow snapped back. So if that is crack and snapback example again in front of us. So if we have considered this as a bullish engulfing for a long opportunity, this one is a bearish engulfing from your candlestick understanding, or if we are not practice the candlesticks, then this is a crack and snapback on the Bollinger Band as well as a monthly resistance, and this will has generated 106 pips in 6 days. So your questions, you can write in the chat section. Ask any question, don't get afraid to ask questions. The more you ask, the better we learn as a group. I give you a few minutes to think about questions and ask. From you, what about others? Lisha, questions? Selben, questions? Vinod, questions? Those of you who have done commodity shares, bond indices, you can ask questions on that. Alright. So if there is no question, then probably we are coming to an end. And then let's see if we can see any more examples of our topic, which is crack and snapback. So we'll go to our posting on this, which was on the 12 hourly. And then see any other crack and snapback example. So we discuss Aussie, Euro CAD on crack and snapback. Okay, there were some examples on crack and snapback on the Euro. The third one could be considered closed on the crack and snapback. So let's just the third one on Euro. So we'll go to Euro USD. So we talked about this one. On the there are many crack and snapback actually, but we specifically talked about this one, written about this one. So if there was an hypothetical line chart turning point here. So what is bullish bar? No problem. Bullish bar good. Bullish bar good because we are going long. Bullish bar good. Bullish bar good. Bullish bar good. Then the first here bearish bar. We need to ask: is this close below this? No. And then we will ask: has it cracked? Then the answer is yes. And then we'll ask: has it snapped back? No. And then we'll ask on this bar. We'll ask: has it snapped back? Then yes. The answer is snap back yes. But if you are a conservative trader or a very rule followers, then we'll wait for this low to be taken out of this bar which has snapped back. Then let's see next bar. Is the close below? Yes. Has it snapped back? Yes. And close below, has it snapped back? Yes. But is the low taken out? No. So we'll not do anything. Then we'll wait. Is there any crack and snap back here? No. Is the close below this? No. So we'll not do anything on this bar. Then we'll see, is there a crack here? Then what we'll do, we'll move this crack to here and then wait for the snapback. So that will not close anything here. So we'll move the crack here, and if it snapbacks, so we'll close it. So is it a snapback? We'll ask the question, is it a snapback? The answer is yes. Then we'll wait for this low to be taken out of the bar which is snapback, and that bar minus 10 pips. So low is 1391 minus 10 is 81. So our close will be price objective of 113.81. So this is one example of crack and snapback on the pivot point. So there is another example of crack and snapback on Bollinger. So this is a crack here. On 7th of November, it cracked through the Bollinger and immediately it snapped back. These immediate snapbacks are, I think, more effective. So this is snapback immediately. And yeah, so that was the two crack and snapback which we saw in last 1 month of Euro USD. So no, one more thing, yeah, one more here, yeah, because of the lightness of the Bollinger Band, it got missed. So now if I thicken it, so now there was another crack and snapback on the Bollinger. So is this fellow cracked through the Bollinger? This fellow, yes. Answer is yes. And is this fellow cracked snapback? Yes. Beautiful. So that is the beauty of understanding and try to implement. See how this fellow did not come close to the S1, although we have a rule of S1 plus 10, and the S1 is, just hold on, আমি এটা বলো, আমি ক্লাসে আছি, হ্যাঁ বল বেটা, হ্যাঁ হ্যাঁ আমি ক্লাসে আছি বেটা, বল, না মা তো বাড়িতে, no problem. Yeah, sorry for that. So the we have a rule of S1 plus 10. S1 is 11203, round it to 04 for our advantage. And then 04 plus 10 is 04, 04 plus 10 is 14. So even if we make 14 or 13, the bearish bar red bar low is 15, so it did not touch 13 or 14. So that is the problem with price, is not perfect. So so if that rule is not satisfied, then the next rule or as an understanding which can be satisfied is, has it cracked below the Bollinger Band? Yes. Has it snapped back above the Bollinger Band? Yes. So if we have taken any setup here, then possibly we'll close the trade here. Is the high taken out? Yes. So from this point, we need to ask again, is the close above, if the bullish bar close above this bearish bar? Yes. Then a high taken out from here, in which our LTP line chart generated a hypothetical sample setup here. Then so we go along here, and then we ask, is this bearish bar close below this? Answer is no. Then bullish bar good, bullish bar good, bullish bar good, 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 till this crack and snapback happens here. Or if you are an expert, or like Pankaj, who takes a lot of advantage of Fibonacci because he has practiced a lot in Fibonacci, so probably he will draw this Fibonacci and then wait for a touch of the Fibonacci at the level which is shown, which is in this example, if I thicken this, 88.6. So this fellow actually went up to 88.6 of this Fibonacci, which we drew from 7th of November 11 to 12th of November 23rd. It went up to 88% of that move and then reverses. So if you are practicing Fibonacci, it can help. And then we may ask how much this fellow come from a Fibonacci point of view. So it actually came here again up to exactly 78.6. So if I take this one, take that out, take this out, because price does not respected that. So if I thicken this, so price exactly stopped there and reverse on the 78.6. So we saw 3 crack and snapback effect on euro on 12 hour last month, and we saw 2 Fibonacci's effect. So that was on euro. Do you have any question? Yeah. Mm-hmm. Kraken snapback is 2 bar, and if we combine, Sri is asking Kraken snapback and close below low taken out how many bars. It is actually Kraken snapback 2 bars, and one we have to wait for another bar for the high or low to be taken out. So it will be 3 bars. Like here in front of you. So this is the first one bar which is cracked. This is the second bar which is 2 snapback, and this is the third bar which is low of the second bar taken out. Similarly, this is the first one which is crack. So this bar is the number 1 cracked, and this is the second bar which snap back 2 bar, and this is the third bar which actually took the high of that snapback bar. Did I answer your question? Come again? It can be. It can be. But the second one, when Sri is asking, is this a crack? Yes. But is it a snapback? No. So if the crack is continuing, we'll take the last one as the first one. Like here, it did not continue. So the first one is the first one. Very good question. Excellent. Any other question? You can type in your question here. So if not, we will go to the last three if there is any crack and snap example. So we'll go to our client arena and see we covered euro. GBP AUD had a crack and snap back. GBP AUD. So let's go to GBP AUD. Either you can type in here or go through the list, whatever you prefer. Okay. So there are two crack and snapback. The good one is here. So this fellow cracked, and then a snapback on the Bollinger. So this is a crack, a repetition of the example of the previous one, and this is a snapback on the Bollinger band. Snapback or on the pivot. So this was a crack and snapback on the pivot. So if I combine every bar which closed below the pivot, which is monthly support 1, and it closed above, or if I can see Bollinger. So this is a we supposing this is a hypothetical sample setup, and this is a crack, did not continue, and immediately snap back. So there are two examples of crack and snapback here in front of you. Your questions. So if there is not much of questions, then we'll go to see what else we can see. GBP CHF had a crack and snapback on second example sample setup, and USD GBP CHF. So if we go to GBP CHF, so GBP CHF, if we have considered this as an example sample setup, or that as an example sample setup, so what we can see is this fellow cracked through the Bollinger, and this fellow snapped back immediately through the Bollinger. So that is an example of a crack and snapback either on pivot or on Bollinger. Same thing happened simultaneously on the crack and snapback on the GBP CHF on 15th November 23 and 16th November 11. So you can see the repetition of what we are discussing this month is on the crack and snapback, and same thing happened here. It cracked through the Bollinger on the GBP USD and immediately snapped back next bar on the Bollinger Band, and this fellow cracked through the pivot and then snapped back on the pivot. So we can see how to take advantage of the understanding of crack and snapback on important points like R1, pivot, Bollinger, like this fellow crack above the R1 and this fellow snap back. So if you train your eyes to see and take advantage of the understanding of the moves, which are very difficult times, at times it can be challenging, when is the change happening, so this crack and snapback actually can help you to understand is there a change happening and so on and so forth. Let's go to the last example of the day, which is USD JPY. It had on 21st of November. So let's see USD JPY. So let's see USD JPY. If we have taken this hypothetical sample setup here, then what we see is immediately this fellow cracked and this fellow snapped back. So this one is not consecutive, it took one more bar. So we see a bearish bar and then a bullish bar. So this is a crack, this cell is a crack, and this one did not snap back. I don't think so, because the Bollinger down is above, and this is again the Bollinger down is above. So this fellow cracked through and this fellow snap back. Price is not always perfect, so not always crack and snap back will happen. Like this fellow did not close above, this fellow did not close above, this fellow did not close above, this fellow did not, so on and so forth. So and this is close above. So in this example of USD JPY last 1 month, we saw one crack and snapback. All right. Yeah, ask. Sri is having a question. Mm-hmm. Yeah. Yeah. In this example, we don't know how many bars we have to wait. No one knows. We have to only see it is continuing to close below. This fellow close below Bollinger. This fellow close below Bollinger. This fellow close below Bollinger. This fellow close below Bollinger, and this fellow snap back. So in this example, it is 5 bar. In this example, in front of you, this fellow crack below and snap back immediately. So if you do again the exercise, same exercise which was there previously in our modules and units, so you'll understand the importance of this technical analysis of crack and snap back. So this fellow crack below the pivot and immediately snap back. So price is price, whatever it does, it will do. We need to wait and see when is the crack happening and when is the snapback happening. Did I answer your question, Sri? Anyone having any questions can talk or can type in. You can actually send us a request of your favorite topic which you want to discuss in our next monthly class. So we talked about snapback uh, on this month. Last month we discussed about this month we discussed crack and snapback. Last month we discussed about I think it was close above below high low taken out, and previous to that month also we pick up a topic of our technical analysis. So next month if you want us to discuss any topic or any combination of topics, please do so. Drop us an email. From today till you have 31 days till the month ends December. So please think about it and take advantage to clear your understanding on anything and everything. And please drop us an email of the topic, favorite topic, and then we'll discuss in our next monthly December monthly class your favorite topic, your questions, and our answers. So that will be in first week of January. Let's see the date, because on the New Year's most of us will be planning something. So the first that's good actually. The first Sunday in January is on 6th. So it's 6th is okay with all of us. 6th is okay. So we'll take 6th of January. So I think we'll be back by that time. So if we do not have any question, then we'll end this discussion of this monthly class of November. And then we wish you Vinod said I could not attend the last monthly session, can you send me the video? Okay Vinod, you can, yeah, anyone who is missed, you can send us a request on the email and then we'll send it. Yes Vinod, that will be done. Otherwise we wish you all Merry Christmas and a tremendous Happy New Year, and we'll talk to you in the monthly class format in the new year. And if you have any questions, let us know and we'll answer that. Sri says thank you. Vinod says thank you. Sel says Merry Christmas to all of you. Thank you, Selvan. Same to you. Thank you. Fantastic. Lisa says thank you, Partha. Useful session. Thank you, Lisa. Thank you, Sri. And all of you take care and enjoy. And bye for now.